We're trading at around about that 705 mark against the greenback at this stage. What are you making of the rand movement that we're seeing right now after we saw positive sentiment filter through and impact that currency after the budget, and then a slight weakening coming to the fore once more?
Well, the rand strengthened yesterday on the back of broad-based dollar weakness, and despite the dollar safe haven status, like the yen and the Swiss franc did amid ongoing geopolitical tensions in the Middle East. We believe that participants fear that a rising oil price could possibly prompt the ECB to raise rates sooner than the Fed. However, given that the oil price retreated somewhat yesterday, the dollar could stop weakening and prevent a further strengthening of the rand against or above the 7 rand handle.
Taking a look at the economic picture, I mean, of course, we've got those rising commodity prices to contend with. On the one hand, we had inflation data filtered through. How are you reading the economic scenario here in South Africa, and implication in line with that on interest rates here in South Africa moving forward?
Indeed, the PPI prices came in at about 5.5% against the 5.8% year-on-year number for December. And while we did see some easing in those numbers, price pressures are starting to creep up on the back of higher commodity prices. However, we believe that the CPI inflation is likely to remain below the midpoint of the target band this year on average. And on the back of that, Standard Bank expects that the Reserve Bank will remain on hold for interest rates this year, with some kind of tightening in the first quarter of 2012.
We were talking about at the desk earlier on how, you know, the Middle East and North Africa situation has really detracted from what we're seeing play out in the US, and then even more so from Europe and the entire Eurozone situation right now. How are you factoring those two territories into the equation at this stage?
At this stage, geopolitical tensions are obviously causing the oil price to increase. We saw it rally quite considerably yesterday, and those factors have been factored into our inflation forecast and growth numbers as well. We do expect growth to come in at about 3.7% for this year on the back of the 2.8% that we saw last year. So at this stage, pressures are, while the pressures are quite high, we do see some kind of moderation and stability coming through later towards this year. We can't obviously indicate whether geopolitical tensions are going to increase or intensify, but we do see growth coming in fairly moderate from what we have seen in the past.